Okay, recording started.
Awesome. Good morning, everybody. I'm going to go ahead and just do a little introduction here of who our main presenter is going to be today. We're going to have this session recorded here so that all of our members in the future, especially new ones, can access this as a new person type of training for the Jifu scanner sniper. Okay. And so John is going to be presenting to us today, and I've known John for probably a little over 4 years now. We were introduced through a mutual friend, and John got started without knowing anything about trading, really this type of trading, right? And same way I did. I didn't know anything about trading when I started to, get into this type of business and learn, how to trade for myself. And John started the same way. I kind of helped him at the beginning, just, get understanding the basics. And John dove into the material, figured it out, and eventually now has become a super, master trader. He's got a win rate of, somewhere in the mid 80s, 80% win rate, and which is just incredible. And so when you're thinking about, well, who am I listening to? Who is this teaching me about trading? Well, like I said, he's a phenomenal trader. He mentors lots of people in his local area, mentors people online, and has a proven track record of being a phenomenal trader. Okay. And he's even being, you know, going through the process to become an official educator here at Jifu. His trading record and his trading resume has already been vetted. Now it's just about, dotting the I's and crossing the T's and get everything in order so that he can be onboarded onto Jifu to become the next Forex educator, which is amazing. In addition to, his trading resume, I mean, John is, originally from the UK. He now lives in Phoenix, Arizona. He's traveled the world. He's lived around the world. He's, opened and started dozens of businesses. He's a serial entrepreneur, and he's just very successful overall. So, John, go ahead and take it away.
Thank you very, very much. I appreciate that. Well, that's fantastic. Jim was the one, he was teaching me right at the beginning. We went through a lot of different strategies, starting with DeLorean, and we've both been a product of the product all the way through, always learning from people better than us. And I think that's the secret to trading and the secret to our success. Jim is a master trader himself, so the kind things that you said about me, I really appreciate that wholeheartedly because that means a lot to me. Jim and Darla, as many of you know, have become dear friends to me. They've stayed at my home before. We've traveled all over the world with each other. So that is nice praise indeed. Thank you very much for that, Jim. I appreciate that. And with that, let's dive in and see if we can teach you something. This is going to be a little bit about uh, going to be a little bit about um, just learning about sniper. Some of us we're beginners. Some of us are experienced, but sniper is a new scanner. We're kind of familiar, a lot of us, with the components of sniper, but it doesn't hurt to learn more. And if you're a beginner here, we're going to run over some beginner tips before we jump into Jifu itself. So disclaimer obviously up there. You can read that. I'm not going to read it out for you. You can take a screenshot of that. But obviously, do your own research, exercise caution, do your own due diligence before making any financial decisions or investments. We encourage you to consult with a licensed professional. I'm not a licensed stockbroker, financial advisor, or investment professional. I'm just sharing my personal opinions and experiences here. That's all. Hopefully, it helps you, though. Um, Now, the first things, because there are a lot of beginners on here and there are people new to Jifu, even though they're not beginner traders, just make sure that you get connected. I'm going to show you how to access the Forex universities, and then you can look through those, take the appropriate classes. There's some beginners, intermediate, etc. Make sure you go through Manny Quinones boot camp. Again, I'll show you where that is in the back office. Make sure you join the team WhatsApp and Telegram chats for Jim and Darla's team and our team. And we all on the WhatsApp, that's the Team Revolution one. That's Greg and Mel's team site. Make sure you download the Jifu Connect app, because you can follow educators, you can follow corporate staff, you can do a lot of things, a lot of announcements and notifications are going to come through those. You can check the boxes next to the people you do want to follow. If you want to follow any specific educator like Corinne, the Crypto Queen, you can do that. And you're going to get notifications if you've signed up for the Forex Global Ideas setup. It is an extra costs $49 extra, so you need to make sure you sign up for that. And then you're going to get notifications through the Jifu app, and you can start taking trade ideas. Jim and I tested it out when it first came out. It was taken off shortly to improve it and upgrade it. It came back on yesterday. It is a fantastic thing. Once it's linked to your broker account on MT4, MT5, it's basically accept or decline any of the offers, and the app does the rest for you. Fantastic, fantastic. Especially for beginners, you can get into trades, take profits, and then analyze it and back test it afterwards, and that's going to add to your arsenal of knowledge. For people who are also building the business, or if people want to know what you're doing, send them to thefreedomlaunch.com. The first landing page they got, there's 4 videos on there. Go and look at it yourself so you know what you're telling people to look at, and it will tell you a lot about the company and the products and the digital services that we offer. Do sign into the members area, because that's where we're going to be, our announcements are. We've got a calendar on there, lots of stuff going on there, so you do need to sign in there. There's not that many people signed in and signed up there, so that's free. You need to get in there. A lot of training, lots of announcements on there. Obviously, get on these trainings. I do post the replays, so this is very important for anybody who can't make the call, obviously, is to get up on these, because they are kind of progressive. So if you do miss out some, I'm not going to be running over stuff that I've already done. You will need to go back to the replay and watch those. And obviously, understanding the sniper scanner so that you can actually take trades on your demo or live account. And that's what these trainings are all about as well. Okay. Just make sure that you're moving forward. That's all it is. This is it's not easy, but it's simple. Okay. One of the things that you want to do, apart from that list that I just gave you earlier, you do need a trading plan. Hit me up if you need an outline so you can fill in the blanks. But you don't want to be trading without it. You do want to know, where, when, and how you're entering those trades. When are you actually trading? What is your time frame that you're going to be trading? You're going to be trading in mornings, London session in the US. You're going to be trading New York session in the mornings, US. London session is in the evening, USA time. So you need to know what time you have, and you should put that in your calendar is most important. And I'll show you why in a minute, because consistency is key in trading. And if you just get on the charts when you feel like it, that's not going to be consistent, and it's not going to give you the results that you want. The trading plan is going to control your risk, and we're very, very big on risk management. We don't want you to get out of your demo account until you're ready and you can show consistent trading, consistent good trading, and consistent risk management. We want you to know how to find the trades. We want you to know what markets you trade. So, Jim is big on Dow and the NAS. I trade mainly NAS and gold, and I have about 6 Forex pairs that I trade. Obviously, with Corinne coming on board, we're going to be doing a lot more crypto, both trading and investing. And crypto we can do over the weekend as well. So, you know, for me, Friday afternoon comes along, the market's closed down. You know, I wouldn't say that I'm a loss, but if I get the urge to trade, then crypto's where I go. So anyway, go through this. You can take a screenshot of this if you like, so that you've got it. That's what I would recommend, so that you know how to make your own trading plan. The trading plan is personal to you, your circumstances, your experience, and your knowledge. And you can change it and update it anytime, but you've got to have it there. You've got to have it written down. I literally have it on my pegboard, on my pin board, right next to my computer. I still look at it all the time, even though I've been doing this nearly 4 years. Okay, this is what I mean by consistency. This is one of my earlier trainings. You'll find all my replays on my YouTube channel. But this is the difference between trading. Right here, you can see at the bottom, trading 5 days a week, Monday, Tuesday, Wednesday, Thursday, Friday. Doesn't really matter the days, but 5 days a week, or trading 3 days a week. In this case, I've not trading on Tuesday and Thursday. So 3 days a week, 5 days a week, starting with 25,000. I do this because most of my students start with a $25,000 funded trading account. That's for another training. The currency obviously is dollars. We're looking at 1% interest rate. This site is called the calculatorsite.com. If you want to write that down, it's a compounding calculator, independent. You want to set it on daily compounding. You can put any figure in here that you like, you're comfortable with. If you have a live account of $1,000, put $1,000 in. Put the interest rate you want to earn daily as your target. Put the months or the years that you're going to be trading. I put do not include all days of the week because I'm only trading 5 days. No one's going to be trading 7 typically. And just to show you, I'm not withdrawing anything, just to show you the difference. So the difference is in 12 months, when you're trading a $25,000 account 5 days a week, your investment value is increased to $335,000. If you do the same thing, 25,000, 1% over 12 months, but you only trade 3 days a week, your investment will be about 1/3 of that, 119,000. These aren't claims, these aren't income claims. These are just to show you the difference between trading consistently 5 days a week or trading inconsistently 3 days a week. Now, I do have educators that I follow and coaches that I follow that only trade Tuesday, Wednesday, and Thursday, for instance, but they are expert traders. They make a fabulous living trading just 3 days a week. They want to have a 4-day weekend, so that's why they trade 4 days a week. But I'm just showing you as beginners the difference in consistency. 5 days, 3 days, okay? There's lots of ways we can lose money at trading. We want you to avoid all of them. We want you to stay in trades that are winning and even adding to winning trades. If your trades are losing, do not add to them thinking the trade is going to turn around, because if it doesn't, you're just going to be losing more money. Don't revenge trade. Don't trade against the trend, especially when you're starting. You can take a screenshot of this. I'm not going to go through every one of them. And you want to be making sure, you don't want to trade based on the news, but you want to make sure, and I'm going to show you this in a minute, you want to make sure that you're trading not at high red folder news, because the market, depending what the news comes out as, is going to be, could go against you. Even if all the signals say it's going to be a buy, it can go against you and drop really, really fast. Market opening is another one that you've got to be very careful about if you're not experienced, because that the market can move incredibly fast at London Open and New York Open especially. Okay, so there is things that you want to avoid and there are things that you want to get better at. And a lot of that is to do with discipline, with patience, and with consistency. Okay, so that is right now, that is the end of that. And I will get out of that and we will go back over here to show you some of the other things that you should be doing. If you go to a economic calendar, I do use myfxbook.com, and when you go there, it will show you here under economic calendar. It will show you where the red folders are, and this will tell you what markets it's affecting here. So if you're trading any euro pairs, obviously be on the lookout for that. I'm mainly looking for red folder news because they're the things that are going to make the market shift in a bigger volume usually. GPP pairs, going through, and USD, obviously this is going to affect the indices, the Dow, the NAS, the S&P 500 more than anything. We had a big one, the employment change here at 6:15. We had the PMI, which is a big one, at 7:45. We had the different services PMI come out. You can see that was worse than expected. The S&P Global was worse than expected at 7:45. So we'll have a look at that and see what happened to the markets at 7:45 when we go over them. But be aware of these because these times can create some major volatility in the market. And the one coming up, 11:45, this Mountain Standard Time, Federal Chairman Jerome Powell will speak. So that starts at 11:45, but depending what he says and how he answers questions, there could be some big movements anytime after 11:45. Could be 15-30 minutes after. So be aware of that if you're trading odd pairs, obviously, etc. So that's the first thing I look at. The reason why I show you that, that's the first thing I look at before I get on the charts, is what news is coming up, and I make a note on the charts so I know when those events are going to occur if I'm not watching the clock. Okay, jifulive.com, that should be bookmarked for you. That's going to take you to your universities, your news, and your scanners. When you click on universities, it's going to take you to this page. And if you're looking at Forex University, it's going to take you here. If you click on here, it's going to show you the whole calendar. And that's what I like about it. I can see who's coming up, what time they're coming up in my time zone. Make sure you set your time zone at the top right here to the time zone that you're in. It won't affect the charts, but it will affect the times that appear on things like the calendars and when the Jifu lives are going on. So make sure you've got Mountain Standard Time. If you want it in any other language, it's in here. There's no difference between English USA and English GPP, so don't worry about that. But this will give you the calendar every day, and you can see we have a full calendar nearly every day of all our great educators. So keep an eye on that. And when you get down here, Delano has a scalper strategy, which is what I do. But Manny is the one that I like to look at. So we'll go back to him in a minute. But what you want to do when you get to these, when you get to these courses, you want to click on specifically for Manny, do access to courses, and it will take you to this, and this is the one that you want to go on. It's Forex for beginners, and it will go through all the different lessons. They've got five parts on here, or 4 parts on here. I guess there should be 5. And this will take you through setting up, you know, very, very basic. You can pick and choose. You can fast forward through the videos, but make sure you get on that, because that's going to cover a lot of things that we do not cover here, because it's already covered. When you go to this Forex University, again, you want to be yeah, that button doesn't work. You want to make sure that you follow whoever you want to follow here. Okay. Now, to get to your scanner, you all know jifulive.com. Click on the scanner, go to the right hand side here, go to the strategy box here, come down to sniper, and there is your sniper strategy. Okay. Usually defaults to gold. I am going to switch over to the NAS right now by way of explanation, where we'll try. Actually, I'll probably get Jim to jump on a bit later and go over US 30 as well, so that we can get some input from Jim. There's a little box down at the right hand side, which is a setting box. So when you click that, you want to click countdown to bar close. And the reason being, that will tell you how many minutes you're away from closing. So we're on the 5-minute now. The 5-minute bar is closing in 30 seconds. So that will tell you where the close is. Okay. And when we look down here, obviously we want to know what it is in Greenwich Mean Time, UTC. That's what it's set at, so that we can all be on the same page when we're discussing times of move. So if we're in chats with everyone and we say what time something happens on the chart, we'll all be on the same page. We all know we're talking about the time at the bottom of the charts here, which is UTC, Greenwich Mean Time. Okay. Now let's go over some basics again for anyone not familiar with this strategy. Okay. The main one is this blue line here. This is your primary trend line. When the action, price action and candles are above this line, it's going to be blue. And when they're below that line, let's see if we can jump to a higher time frame to see that. It's been blue a long time, so we might not see that at all. Yeah, you can see here it turned to red when the candles went underneath it. So when this line, trend line, is red, you should only be looking for sells. When the trend line is blue and the candles are above the trend line, you can start looking at buys. Do not go counter trend until you're experienced and you're happy with your success rate. Okay. These dotted lines here show you the highs and lows of that session. So it's a good indication where the highs and lows are. But bear in mind, these do move. So during the session, you know, if it keeps making higher highs here, this dotted line will keep moving up. So it's not static. And we'll go into some trend lines shortly to show you how to mark that up. But right now, let's go over this. So again, primary trend line blue, candles above, only looking for buys. Secondary trend line is the blue EMA and the red EMA. When blue crosses red and you're above the trend line and you're on trend, you'll be looking for buys. When the blue crosses down below the red line and you come below the main trend line, you would be looking for sells. So in this instance over here, instead of just looking at this to be an entry here, a safer entry is when the EMAs actually cross below the primary trend line. Nothing wrong with getting in here. That's still a great entry, worked out great. but a safer bet is to wait until these trend lines dip below the primary, the EMAs dip below the primary trend line. Okay. This is the Bollinger Band, upper Bollinger Band range, lower Bollinger Band range. Again, when the Bollinger Bands are expanding, that's a signal to us that the market is on the move. When they're contracting like this here and here, you want to be aware that the market might not be in your favor. So expanding Bollinger Bands like this, contracting Bollinger Bands coming together like this. Okay, so just be aware of that. We want to make sure that we are in the market when there's movement and when there's volatility. The other thing that we like to see is if the candles are in the lower zone of the Bollinger Band, that means it's a strong sell signal in this case, strong buy signal in this case, strong buy signal in this case. A further confirmation of that is when you're in a buy, if it stays above the blue EMA. And on a sell, if it stays below the blue EMA. And you can use the crossover of the blue EMA as an exit signal. There are lots of different exit signals. Could be a bullish engulfing candle when you're in a downtrend. It could be crossing the blue EMI here. I'm one that I don't like trades being in this white zone here. But again, depends where your stop loss is. Your stop loss might be up here. In which case it wouldn't hit, but it would hit here, and whatever gains, if you didn't access the trade or enter the trade here, and you waited further, and then you, as it went down here, you brought your stop loss down to the primary trend line, for instance, then what's going to happen is it will eventually come up, hit your stop loss, and you'll actually, all those pips there you would have lost, you would have just broken even. So even when you set a stop loss, always remember there's nothing to stop you manually exiting the trade if you think it's turning around. So if my stop loss was here and I was looking at this, we're going into the white zone, we're crossing over the blue, I think that we're getting a little pullback here. I could manually exit here and I would take a decent amount of pips before it hit my stop loss. Stop loss is just insurance. When you're driving a car and the car in front of you stops, you slam on the brakes to make sure you don't hit it. But the fact of the matter is, when you do hit it, that's your stop loss, you're going to stop anyway. So we want to try and avoid those accidents. We can manually exit these trades. Okay? Down here on the stochastic, this is going to give us some good ideas of when to get in and out of trades. So this is the overbought, the red line, and this is the oversold, the blue line. I do like to put a horizontal line in the middle around the 50% range. Because very often that's going to show as a signal. You can see a lot of times it bounces off that 50% range, which means it's not a strong trend. Usually means we're going to be a bit rangy, or we thought it was a little pullback, but it's actually going back on trend again. So I like to put that 50% line in there to give me a further confirmation on the stochastic. Basically, what we're looking on the stochastic is when it is above the red line, but then comes back down through the red line, we'll be looking at possible sells. And when the blue line comes from an oversold situation up through the blue line, when that stochastic comes up through the blue line, we'll be looking more at buys. Very often, this will be an early indicator. And one thing that I like to look at is where it crosses here. I want to make sure the candle is the same color as the signal. So when it crosses here, if you follow that dotted line up, you can see that we do have a bullish candle here. So that is a decent entry right there, even though it's counter trend. Be aware of that. When we break through here again, you follow that line up. What happens is that dotted line you can see is on a red candle. So I would not enter there because the candle color is against me. I want a bullish candle, not a bearish candle. So actually I would have waited for this with slight bip right here, because that is where the green candle is right there. So I would not have entered on the red candle. I would have waited for the green candle. So bear that in mind when you get a signal here. So look, here's a perfect example. This stochastic is crossing down the red line, crossing down the overbought. Okay, we do have a little red candle, but it's immediately followed by a green candle. So this to me is not something I'd be looking at to get in. So that would keep me out of that trade. And again, once you get rangy like this, and one thing I would say, when you go through this training about what is a pip, what is a chart, what is a candle, what the candles look like. When you got little small candles like this, you know, this is a very rangy indicator. There's no volume there. We're waiting for it to break out of this range. Bollinger Bands are contracting, they're getting narrower and narrower. The other thing that we see here is the secondary EMAs are getting closer and closer together. So what we want the EMAs not only to cross here, but we want them to start moving away from each other. The larger the gap, the stronger the movement is. So you can see as it starts going up here, we bounced off here, but if you can look up there, that is a red candle above it. So that red candle was where it bounced up. We got a green candle here. We got another red candle here. There's our green candle right there. So that would be our entry. And then as the secondary EMAs start expanding and our candles stay in this upper cloud range of the Bollinger Band, we can stay in this all the way up. So we would have entered here. We would have entered here, and we would probably, you could probably stay in that. I don't like trading in the white zone, so I probably would have got out here. I might even got out here because these candles are also indicative of slowing momentum, some test bars, some wicks going up there to test that level. It didn't hold on that. Then we had a downward. You might even get out a little earlier than that if you were watching what kind of candles they were. I'm not going to go into that on this training, but these would indicate, and we got a double top as well. These would indicate there is a reversal or a pullback coming. So if you were sharp, you would have got out a little bit earlier, probably around here. Okay, and so you would have got all those pips from there to there on the NAS, which would be a nice 26 pips. Okay. So that would be very, very nice indeed. Okay, so the other thing that we want to do when we're looking at that shows you what the actual chart is telling you. And remember, every candle, every indicator, every line is telling you a story. And your job is to interpret the story the chart is telling you. We don't have any control over the chart. It's like reading a book. We don't have any control over reading the book, but the author is going to take us to the conclusion of the book. No matter what we do, no matter how fast we read, how fast we turn the pages, the book is having a conclusion. And it's the same with the chart. Each of these candles, when you analyze the candle, the size, the strength, the wicks, the positioning, what type of candle it is telling you a story. And if you don't understand the language, you're going to get caught out. So it's vitally important with that training. And if you need a refresher, go back through that refresher training. When we go, the other thing that I like to do when we go to the higher time frames is I like to draw up my support and resistance lines, my area of interest, my levels, because these are going to give me lots of reasons to look out for where we're going. We are making all-time highs right now, so it's a little bit difficult for that. But one big rule that I would tell you is be aware of big round numbers. So when you get to, 21,000, for instance, that's a big round number. When you get to 21,000, let's do 21,000. Let's do a line down here, 20,000, let's say 20,400 is another line there. So, very often these 100, 200, 300 lines are going to be areas of support and resistance. Okay. Here's one around 21, 200 right here. And very often you'll see that the candles will tell you, yes, that's an area right here of resistance. It hit it, hit it, hit it, came back down, tried again, didn't make it, tried again, didn't make it, came back. But eventually it comes up, breaks through this one, breaks through this one, we got all-time highs. And when you change from the higher time frames, those lines are going to stay on there, and you can then look for other areas of support and resistance as well. There's a big low down here. We want to make sure we know what that low is. To me, it's right around the 20,600. So even though that wick goes slightly below it, I am going to put it at 20,600 because the 600 is a big round number. It wicked down, didn't hold it, went back up. You can have it slightly higher and say this was the level here, a little bit above 20,600. The other thing to remember is these numbers on here may not correspond exactly to the numbers on the broker that you're using. So be very, very careful about that. Make sure that you know the difference. Sometimes it's 2 or 3 pips. Sometimes it could be 70, 80, 90 pips or even more. So be aware that this count here may not match your broker. Very, 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 very important to know that. Okay. That is where I'm going to stop right now because I'm going to hand it over to Jim so that he can go into a little bit more detail and plug up any gaps that I've forgotten to impart to you, and share his knowledge about the Dow especially, and maybe some other things he'd like to share with me. So take it away, Jim. I will pin you as well, so you're right there. And if you want to share your screen, I've stopped sharing mine. So, or if there's anything else you'd like to add to that, Jim, please go ahead. Jim is my mentor. He's a very modest man. We like to make fun of each other. We're in a serious business, but we have a lot of fun as well. So please give it up for him. He is a master trader. I consider him a better trader than me. And he is an expert on the charts. He will give you insights that you didn't even really know you had. He has analyzed this, and he is a professional trader. He's a world traveler. They are true digital nomads, Jim and his wife, Darla. And they've spent many, many years on the road. They gave up their primary residence so they could just travel and live the digital nomad lifestyle, doing what they want when they wanted it, on the road, still making money in trading, still making money in their other businesses, but leading a true yes life that myself especially is something that I aspire to. I'm glad to consider them my mentors, my coaches, and my friend. And he's going to show you right now just how important he is to us, to me, and to the team. Take it away, Jim.
Thank you very much, John, and thank you for that training. I'm just going to add a couple things here because you pretty much covered everything. So John and I are scalpers, which means that we trade on a small time frame. Okay, so for me personally, I trade on a 1 minute time frame. I know John looks at the 1 minute, the 3 minute, 5 minute. Okay, you can use this sniper tool on any time frame you like. I personally think it works quite well on a low time frame like the 1 minute. And so and we also we trade indices. So John favors the NAS 100. I favor the US 30, but I do also look at the NAS 100 as well. But regardless of which indice you might be looking at, and depending on where you live at in the world, a different indice might even be better for you at during the time that you're available to be on the charts. But yeah, so I look at both, and sometimes I just flip back and forth. I'll have a couple tabs open. So right now we're looking at NAS 100 on the 1 minute, and then if I change tabs up here, I have US 30 on the 1 minute now. And so depending on which way the trades are setting up, or maybe one of them is in consolidation or not really setting up for me, I can flip to the other one and see if there's an opportunity there. And when you're new, you may look at several pairs. You may even look at something else that isn't an indice. You might look at something like gold, or you might look at forex pairs, which is great. Get familiar, look around, figure out how things move. But my suggestion to you is once you kind of get the hang of this strategy and you understand, how certain pairs move, focus on, two, three, four pairs, okay? Because there's plenty of opportunities to be had with just a few trading pairs, okay? And so for me, like I said, US 30 and NAS is plenty for me. I usually find enough opportunities between those two pairs to make trades. I get on the charts for myself, usually anywhere from an hour to 2 hours max to find the opportunities that I'm looking for. Sometimes I'm only on the charts for 15 minutes because the opportunity presents itself right away, and I take advantage of a trade entry and it hits, my daily goal in a short amount of time, and I'm done for the day. There's no need to stay on the charts, right? Part of the thing about becoming a trader is you have to put in the work at first. You have to put in the studying and the understanding of a strategy, and then the mastering of a strategy and the perfecting of a strategy, so that all that time you put in now, you can reap the reward to not have to, spend hours a day. The reason we do this is to be free, hopefully. And so, there's not any freedom in being on the chart for 8 hours, right? So the quicker you can be off, the better. But so if I do have a short trading day, like 15 minutes, that gives me time to also do some back testing, or watch some lives from some educators to beef up my knowledge and my understanding of the markets. Okay, but as a scalper, we're looking for relatively small moves in the market that typically don't last very long. I don't usually stay in a trade more than an hour. Sometimes, like I said, it's a few minutes. It can be 20 minutes. It can be 45 minutes. But usually, typically not more than an hour, especially when you're looking at something, on a 1 minute chart. And so, one of the things that is good for everyone to understand is how to work TradingView, right? So right now, all of the Jifu scanners are built on a TradingView platform. You can see the TradingView logo down here. And there's trainings you can watch. You can reach out to me or reach out to John about some trainings on TradingView that you can watch so that you can become more proficient at navigating this scanner. Okay, learning how to manipulate it, learning how to resize it, learning how to use the drawing tools over here and so forth. Okay, so I definitely recommend you learn how to use TradingView. And one of the very good useful tools inside of TradingView is over here. There's a section called forecasting and measurement tools. And the first two here are long position and short position. And these are tools that can help you visualize what a buy setup would look like or what a sell setup would look like, right? So long is for buy and short is for sell. And when you click the long position, for example, and you click anywhere on the chart, it's going to drop this box, okay? And the green part of the box represents where your profit would be, and the red part of the box represents where your stop loss would be at the bottom, okay? So when you get into a trade, depending on your trading plan, you would have a stop loss set at some area. Okay, for me, it's typically roughly around 25 pips. Okay, and then you could have a TP set, or you could just trail your trade and exit, manually, or exit by a trailing stop. But for myself, I like to have a 50 pip TP set in my broker. And this box will help you visualize what that trade would look like, right? And so I'm not going to go into the specific, trade entry here and trade entry reason. This is not exactly a trade entry, but for example, here, you could put this box up here and then you could visualize and see what a trade would do, if you had entered after this candle closed right here, okay? And as you can see, what happened here is we had a small wick down on the next candle, which would have made your trade go in the negative. And then immediately on that candle, it goes straight into positive. Now, this is market open, the New York market open, so I wouldn't actually take a trade here. But I just want to show you what it looks like to use this tool, okay? And so if you're looking for another entry, so down here, we break down and we become oversold on this RSI. And then on the candle where it goes up, which is this big green candle, this would be potentially, an entry. All right. Now, I necessarily wouldn't enter right at the top here because this is a 35 pip candle. And I don't like getting in on candles that are that big. I will either wait for a different entry or I'll just wait for a pullback to around half of that candle. So, you can visualize, getting in halfway into that other candle and having a stop loss down here and having a take profit of about 50 pips up here. And as you can see, this pulls back a little bit, doesn't hit your stop, and then goes into profit quite a ways, maybe 15, 20 pips. Let's see here. Yeah, so 21 pips. And so at this point, once it starts to move into profit, you can manage your trade. Okay, so on your MetaTrader, you have a stop loss setting, and you manually adjust that setting as you go. Okay, if you're using MetaTrader on your phone, if you're using MetaTrader 4, you just type in what your new stop loss would be. So whatever your entry price is, as John mentioned, the entry price visualized here is around 44,952, but on your broker it might be different. And so once the trade starts to run into profit, 15, 20 pips, you at least want to be, protected and break even. And so your stop loss is no longer down here. Your stop loss was down here when you started the trade. And as the trade starts moving in your favor, you're making your stop loss up here. So that worst case scenario, if the trade does not continue up and starts going back down, you no longer have any risk in the market, right? You will not lose any pips, any money if your stop loss is above where you entered slightly. When I refer to something as break even, I actually mean a couple pips in profit. That helps ensure that any spread or any slippage isn't going to make me lose any money. I will actually get taken out with a little bit of profit. Okay. And as the trade starts to move up, you can move this up visually here, but in your broker to a higher number. And then if the price was to continue to go up, I would keep moving my stop loss higher to make sure that I secure the most profit as I can, because we never know how far this could go up or when it might reverse. Okay. But you can, as a starting point, use this long and short position tool as a little test for understanding the strategy, right? And so if we come back over here, we can do short in the same way, right? We have a break below the primary trend line, and we have a pullback here. It doesn't quite get all the way oversold, but we do have some nice wicks up here, and then we have a nice bearish engulfing. So this could be a potential entry. And like I said, I like to use a 25 pip stop. In this case, 25 pips just gets me past this single candle, which I don't love. So I probably would use a 30 pip stop just to give it some room to breathe. And then I'd have a 50 pip take profit set. Okay, and then we can see that this went very deep into profit, probably about 45 pips. And, it's come back up and come back down and still hasn't hit that 50 pips. Now, if I actually took this trade, I'd be out of it by now because I would have had originally a stop loss here. And then as this came down into profit, pulled back a little bit, and then came down into more profit, my stop loss, would have been here initially after the pullback. And then as it pulled down, I would have had a, stop behind this candle. And then, maybe I would have got taken out here, or, maybe I would have trailed down because this is also quite a large candle, around 20 to 25 pips. And I want to make sure and secure as much profit as I can as this is going down to my target, because, you're not always going to hit your target if you are setting a target, but you want to secure as many pips as you can as this is going in your direction. Okay. But the point of this whole thing is just so you can learn how to use these short and long position tools. Okay. And once you learn how to use that, you can start visualizing what the trades look like in the market. And then what's important for you, if you are new, is that you want to get in your trading platform, right? And for most of you, that's MetaTrader. And you want to start pressing the buttons. You want to start getting into buys and sells. And this isn't a demo account, right? You want to make sure you start pressing the buy, pressing the sell, understanding how it works, understanding how to modify your stop loss, understanding how to close a trade, because the faster you can learn that, the faster your confidence builds that you can use that tool. And now that tool is not, a determining factor on whether you're understanding how to trade and understanding when and how to get into the markets, right? You mastered MetaTrader, and now you're actually focusing your time on the charts, on when you should get in, when you should get out, how these pairs move. Okay. So I just wanted to touch on that. So getting into the actual analysis here on US 30, as John said, I like to start before I actually do any trading. I like to get on the scanner here. I like to move my time frame to the 4-hour and just see if I see anything that's significant that I should be aware of. Okay. And one of the things here I immediately see on US 30 is, we don't have any particular exact line here where price has come to and rejected, but there's quite a zone here, right? We have a peak here, another wick here, a wick here, a wick here, and a wick here, right? So this is an area where price has come to multiple times and has not broken past and rejected. So I would make myself a box here covering all the way from the highest point to the lowest wick that is all in this area. And this zone is, quite large. It's about 70 pips or points there, but that's okay. US 30 can move, as you saw, 30 pips in one candle. So the fact that this zone here is a little bit large with 70 is not that big of a deal. Okay, but The reason I would do something like this is that once price starts trading up here on the 1 minute chart, I would become a little wary about getting into a buy while it's here in this area or while it's close and approaching to this area. And if I did decide to get into a buy, I would be very, very tight with my stop loss. As soon as I saw the trade, coming back away from this area, I would probably close my trade and take any profits I had. And if I was actually losing, I would minimize my loss to a small loss. Now, since I have this area here and I'm, wary about trading while it's in the area or close to the area, but when would I get into the trade? If price finally decided to, test this area and then come out of the top of this area, I wouldn't immediately get into a buy as soon as it broke out of this area, but I might wait for, a retest of this area and then a continuation for it to show me that price finally wants to leave this area and move on. And then I'd be looking for buy ideas over here. Okay. Another thing this area can tell me is that, I don't typically like to trade counter trend, but I know that price has come to this area and moved away very quickly many times. And so in the event that price comes down up to this area again and has another strong, move down, I would be more comfortable taking a counter trend trade knowing that it's moving away from a very significant area. So that's why I like to analyze the higher time frame. And then the other thing I can see here is that we have, a recent low, down here. So I want to make sure and be aware of that. And then if I drop down to, say, the 15-minute, I might get a little bit different perspective on, some things of interest. Like potentially I have a trend here, okay? And then I have another low here that I might be interested in, okay? And so when I drop down to my 1 minute and I'm doing my trading, I know that when I get up to this area, I should be careful about taking buys. If I manage to get into a buy somewhere down here and I ride it all the way up here, once it gets up here, I might take my profits or I might trail my stop very close because I've seen in the past that it can reject hard from this area. And then down here, I can see that not only do I have a low here at this wick, but I also have a trend line. Okay, so once price starts approaching here, same thing, right? I'm probably not getting any new trades around this line or this line. And if I get any reversals from here, it would be counter. And so I might be interested in taking a counter trend trade away from these lines. And then if I do break through here, then I have a ways down that I can go down to this line. And so I would be happy to take trades that followed the rules coming below this line down to this line potentially. Okay. So that's why it's important to, look at the higher time frame. And if you're new, you may not see these things stand out as much as they stand out to me, who's been doing this for quite some time, but just practice, put some support and resistance, some trend lines, or some whole zones on your chart. And you'll be surprised, once you start getting the hang of it, it'll start to click and you'll see price come up and reject, and you'll actually kind of be happy with yourself that you were able to spot that. All right. One other thing that I wanted to just point out here as we're coming up on an hour is over here you can navigate through the different trading instruments that you have. And so for instance, right now we're on indices and we see a list of indices available here. Okay. But you're not necessarily limited to just these. So if you come up here to the upper left-hand corner and you tap where it says US 30, you can actually, type something else if you'd like, right? So some people like to trade the UK 100, or maybe they're just awake, during London session and they like the movement of an indice. So if you just go up here and you type UK 100, you can actually see that even though it's not on the list here. And the same goes for, any Forex pair or, any cryptocurrency or anything like that. You can just come up here and type it in yourself to go look at the chart for that trading instrument. All right. That is all for me, John.
Wow, that was fabulous. Thank you so much for that. I appreciate your input there, Jim. Hopefully everybody got some good information about that. Learned some things. I already learned some things from Jim there that I didn't know. So always be learning. That is the key. So